What's up, guys? It's Gen Z Trader, and today I'm going to be showing you guys the ribbon strategy for my trading strategy. Now, if you're new, please like, comment, and subscribe. Also, share this video, and let's get right into it. So, before that, I have to adjust my screen a little bit. Um, let's see. So, right now, I'm adjusting my screen. Uh, Let's minus this out, and we are ready to go. So the ribbon strategy that I'm going to be showing you guys is basically four moving averages that I'm going to be using in this strategy. So it's going to be, I'm going to show you all the settings, and the name of this indicator will be MA ribbon, which is going to show you four different types of moving averages. So for my strategy, I'm going to use the 13 WMA, which is the 13 Wade moving average. I'm going to also use the 13 EMA, which is the 13 exponential moving average. I'm going to use the 50 WMA, 50 Wade moving average, and the 50 exponential moving average, which is the 50 EMA. So those are the four types of moving averages that I'm going to be using for my strategy that I currently use for my trading. And the time frame, you guys, that I currently use is the 1 hour time frame. And I like the 1 hour time frame because the entries using this indicator is very accurate. I'm not saying that it's accurate every time, but it at least gives me a 40% win rate. So I'd say that's a very good win rate, especially in trading. So I'm going to show you guys the current indicator. So this might be a lot for you guys, but this is what my indicator looks like. And some of you guys may say, what is this that I'm looking at? But this is the current indicator that I use for my trading. And so far, I've profited pretty well using this strategy. So I'm going to give you guys an example of what to look for. So with this strategy, I use these four types of moving averages. I also use support and resistance zones. So for an example, I'm going to show you guys a support zone that I really noticed in the past month. So I'm going to draw you guys a rectangle. I'm trying to find the rectangle now. Um, it's really hard to find. I mean, it's not hard to find, but I just forgot where it was. I'm trying to draw you guys a rectangle. Here it is. So I'm going to draw a rectangle right here because that's where some wicks are touching at. And that's one confirmation for this trade. So then I also look for a point where all four of the moving averages cross each other. So it would be around like this area that I'm pointing at here. I'm going to put a rectangle right there. And this area right here is the area of which I'm going to be looking for an entry point. After I notice that the moving averages have all four of the moving averages have crossed each other, then I would be looking for an entry point, and then I would hold this trade for as long as possible until I feel that there's a point where the market might go in a downtrend. So I might have could have exited here, or I could have exited maybe here. So this could be an exit point. So right here could have been my exit point for this trade. And because of the moving averages crossing and there is a possible downtrend that will occur. So I would have exited this trade and I probably would have gotten a 1,000 pip move, meaning for gold, sorry, my terms, but for gold, I went from about 1945 to 2055. So that's about an 1,100 pip move, which would be 110 points. So from 1945 to 2053, 54, that would be around 110 points. That would be going up, and that the profit would be in, because I would want to exit around here. And basically, y'all, that is my strategy that I currently use. For resistance zones, I'm going to show you guys another example. So for resistance zones, I might use, for an example, I might go here. I might notice this candle right here touching, or at least I would notice the candles going downward. So after I notice this move of this cross, I would notice like, hey, this is a resistance zone. So let me show y'all the resistance zone. So this would be a pretty good resistance zone here, since there are candlesticks touching. Then I would be looking for an entry point, which would probably be around here, since I noticed the 4 moving averages crossing. And then I would probably place a trade and then go around, go down, hold this trade until I notice a change. So if I notice like here, I probably would have exited here and look for another entry. And basically that is my current trading strategy. And that's how you trade with ribbons. And sometimes there is consolidating markets. So how I would identify consolidating markets, which are sideways markets, is I'm going to show you guys a pretty good example. So one happened here. So in this type of market, you see this is going sideways. I would not trade within this zone here because I noticed the moving average is in a straight line. Like in this area, the moving average, you see the 200 moving average, which is the 200 EMA, is moving in a straight line. I can make this clear for you guys so that y'all can see it more clearly. Let's see, rectangle, style. All right, so you see this blue line. This is the 200 moving average. And you see that crossing through this rectangle, it forms a straight line. So that gives me the indication that I should not trade this market at this time. But whenever this crosses over and this goes down, then I would look to go into a trade here and maybe accumulate a little bit of profit here. And that is basically my strategy, y'all. And thank y'all for watching. And This is the ribbon strategy that I use, and this is the strategy that has helped me to get funded with prop firms. And thank y'all for watching. It's Gen Z Trader. Peace out, y'all.